to give a quick intro. So my name is Tad Slaff. I'm the co-founder and CEO at Inovance. And really our focus is to help make you a profitable trader. I know when we were starting out trading, we found pretty quickly that there wasn't a lot of tools out there that would help us come up with new strategies. So that's why we developed TRAIDE. With TRAIDE, you can easily use machine learning algorithms to analyze the indicators that you use to trade live. So what I'd like to go over in this webinar is a brief intro to algorithmic trading, and then we'll actually create a strategy that you can then go and trade live on your own account. I'd also like to announce the launch of our TRAIDE Quant Fund with our partners at Gallant. So we're obviously creating and trading strategies that we build on the platform live. And so now, if you have an account with Gallant, you're not only going to get full transparency into the strategies that we're trading, but you'll be able to follow the live signals generated by the TRAIDE Quant Fund on your own account. So we really wanted to partner with Gallant for a couple reasons. So first, they really put an emphasis on providing the latest tools and technology to their traders. But on top of that, they're really a great firm for algorithmic and automated trading. They offer free VPS, they have the trade copying, and just in general, they're good people to work with. So I'll hand it off to Bill Schneider, who's one of the directors over at Gallant, who can tell you a little bit more about what they're doing. Bill?
Thanks, Tad. Hello, everyone. Thanks for joining the webinar today. My name is Bill Schneider, and I am the Director of Sales at Gallant Capital Markets. Gallant is one of the leaders in the foreign exchange industry, and we specialize in spot forex, CFDs, and metals. We offer our clients true STP DMA technology and execution using Equinox data servers. Traders who use automated and high-frequency trading systems can benefit from our ultra-low latency execution to receive the best possible performance from their strategies. This is why at Gallant we are committed to providing the latest trading tools, which is why we wanted to work with Inovance. So with that, I will hand this back to Tad and let him take you through the product.
All right, great. Thanks a lot, Bill. And one other note, so if you do open up an account with Gallant, Bill was nice enough to give us a special $2,500 deposit when you do open an account. So that'll allow you just to start off by following the Quant Fund or trading these strategies on your live account. So if you are interested in opening up an account, you can see in the link in the chat. We'll get you started, and then Bill will be more than happy to go through that process with you. Before we dive in, I'd like to just get a quick sense of who's in the room with us. So if you notice the chat on the left, if you could just put in a 1 if you have experience with algorithmic or automated trading, maybe you've built or traded your own EAs before, and put in a 0 if this is an area of subject that might be a little bit more new for you. That'll give us a sense of who's in the room and kind of tailor the talk a little bit more. So I'll give you a couple minutes to enter there, and once again, you can find the chat log in the bottom left-hand corner. All right, we see a -1. Good to hear. Peter, so it looks like someone's having trouble with audio. Is everyone else able to hear me, Peter? I'm not sure what's happening on your end. We'll give a couple more minutes here for the results to trickle in. Okay, great. So it looks like we have a pretty good mix, maybe leaned a little bit more heavily towards people who do have experience with automated or algorithmic trading. But just to get started, I'd like to give a quick overview. So when we talk about algorithmic trading, we mean any strategy that has a predetermined entry and exit conditions that can be traded in a fully automated fashion. So whether you're familiar with MetaTrader 4, this is usually the form of an expert advisor or EA. Now, a lot of people like to think that algorithmic trading are these huge black boxes with thousands of lines of code and all these complex algorithms. But really, even if you're just trading a simple moving average cross, if it can be traded fully automated, that's still considered algorithmic trading. And what we like to do at Inovance is really place a priority on understanding how your system works, when it's going to trade, when it's going to enter, when it's going to exit, and all the different components. We have a lot of experience building these strategies, and over time we've found that there are really 3 things that you want to be careful of and be conscious of when you're building your own strategy. So the first thing is that you always want to be sure to test your strategy over data that wasn't used to build it. For experienced algorithmic traders, I'm sure everyone's had the experience of building a great strategy that looks awesome in a back test, but when you go to trade it live, the performance quickly deteriorates. Now, this is the classic overfitting problem, where your strategy is basically just memorizing the historical data that you used to build it. So there are 2 different ways that we like to get around this problem. The first is that you can paper trade your strategy, which means trading it on live data but without any money behind it before putting it on a live account. And the second way is you can leave a subset, usually of the most recent data, to test your strategy over that wasn't used to build it. So when we're building our strategies, as we'll see here in a couple minutes, we like to actually combine both approaches. So we'll leave a subset of data out to test it over new data that wasn't used to build it. And then we'll also paper trade it on a demo account for about a month before trading it live. And the strategy that we're going to build today is actually going to be one that could be included into the trade quant fund if it does perform well on that out-of-sample test. The second thing that we always look for is that our strategy performs well in a variety of different market conditions. The danger here is that your strategy may look good, but the second that the market becomes more volatile or maybe enters in a strong bearish trend, that your strategy is not going to perform well. Now, we want a robust strategy that's going to work well in a variety of market conditions because we can never really be sure what the future holds. Now, one special caveat to this is that if you're specifically designing a strategy to trade in certain conditions. So for example, I want to build a trend following strategy, so I'm only going to look to enter when I have a strong trend forming. Now, this is completely okay. You just want to be conscious of other factors that might affect your strategy. And the last thing that we always want to be careful of is making sure that when we're backtesting and testing our strategy, that we're using realistic live trading conditions. So what this means is that you're always incorporating realistic transaction costs, slippage, you're using the same indicators, and even the same underlying data, which is why it's important to work with a partner like Gallant, where you can test and run your strategy over consistent data. All right, so if there's no questions here, we can dive into actually building the strategy ourselves. So if you look into the chat, I'm going to set a link to the actual strategy that we're going to be creating so you can follow along together. So if you already have a trade account, you'll be able to follow the link and that'll bring you directly to the strategy dashboard. If you haven't signed up for TRAIDE quite yet, following the link, you'll be able to create your own account. It's free and just takes a minute, and it'll allow you to follow along with us as we build the strategy. I'll also be sharing my screen, so for those of you that would like to follow along with there, you're able to do that as well. So as people log into TRAIDE and get to that strategy, I'd always like to make a specific point that, share my screen here. All right, so is everybody able to see my screen? So I'd always like to make a point to mention that this is a pre-created strategy that I've created over this week. So this isn't something that just magically appears. While TRAIDE really helps you come up with new strategies, it's not going to do all the work for you. So what that means is you can look on my home table that there's a lot of different variations of this strategy. And it took me, let's see if I can get rid of this. All right, hopefully that's better. You can see there's a lot of strategies, a lot of different variations of this strategy before I got to the final one. So TRAIDE is really great at testing different ideas and really iterating through the strategy development cycle a lot faster than doing it manually. But at the end of the day, you're still going to need to use your own analysis and put in the work to come up with these strategies. So all in all, from start to finish, this strategy probably took me between 5 to 7 hours, but it is something that I'm really excited to try out on a live account, and hopefully it'll be included into our trade quant fund. So hopefully everybody's got on the trade, but let's get started and go through the process of building a new strategy. So we'll name this Webinar Strategy 1, and then select the asset that we want to trade. So right now we're focused on FX, but you can see here down at the bottom that we do offer equities, and we will be greatly expanding this asset list moving forward. But today let's go through the process of building your USD strategy, and then select the time frame that we want to trade. So playing around with trade, we generally find that you're able to find stronger signals using longer time frames. So the shorter time frames, 1 to 2 hours, and everything underneath that, the data is really noisy. So it's much more difficult to find a strong, clear signal that's going to hold up moving forward. Trading longer time frames also decreases the effective transaction costs, where if you're trading a couple times a day, those commissions and the spread are really going to eat into your profits. But just trading once a day, you're much more likely to overcome any minimal transaction costs. So let's build a Euro USD daily strategy, and then we'll select the date range that we want to use. So there are two things to consider when selecting the date range. Like we mentioned before, first, we always want to be sure that we're exposing the strategy to a variety of market conditions. So that means being sure that you test your strategy over a long enough date range that's to be able to see bullish, bearish, sideways, highly volatile, low volatility conditions to make sure that you're really building a robust strategy moving forward. Second thing that we always want to consider is always being sure that we're leaving data that wasn't used to build the strategy to test our strategy to help prevent overfitting and have more confidence that it's going to perform well moving forward. So in this case, since we're building a daily strategy, I'm going to leave all of 2015, so a little over a year, of out-of-sample data to test our strategy before trading live. Then finally, we're going to select the indicators that we want to use for our entry and exit signals. Now this is really the meat of the strategy. So you can see here we can select fundamental indicators. Maybe we're interested in oil. So that's something that's been in the news a lot recently. Maybe we want to look at something like the euro-dollar deposit rate, or even sentimental indicators. Right now I'm more focused on the US markets, but this is another area we'll be expanding. But in this case, let's just build a technical indicator-based strategy. Now, like I mentioned before, when you select the indicators for your strategy, it's really an iterative process. I like to start out with indicators that make sense to me, that I understand, and I know what they're telling me. So for instance, let's say we wanted to trade with a simple moving average. Now, when you or I are using a simple moving average to trade, we're not looking at just the price of the line. What we're really interested in is where the SMA is relative to the current price. So for example, if the price is above the moving average, we tend to think of that as a bullish trend. If it crosses below, we tend to think of that as a bearish trend. And so when we're selecting our indicators, we always want to be conscious of what the algorithms are looking at. So what we're going to feed in here is not just the price of the SMA, but the difference between the current price and the simple moving average line. So let's use a 50-period SMA, and what this indicator is going to return is the distance in pips between the price and the 50-period moving average. So when we see that number positive, that tends to be a bullish trend as the price is above, and if it's a negative number, we tend to think of that as a bearish trend since the price crosses below. And second, let's choose another common technical indicator here, the relative strength index, to help time our entries. So I tested out a variety of different periods along with the price minus SMA, and what I found was something a little bit more sensitive, like a 7-period RSI, was able to return much better results. Since we're using a daily strategy, this is about a rolling period of about a week, and I found that to be much more effective when timing my entries, especially in combination with the 50-period SMA. And once again, this was after a lot of iterations, testing a lot of different indicators and periods, but you can see pretty quickly with TRAIDE whether a strategy or a certain indicator is going to work out well. And finally, let's use another common indicator, the average directional index. So this will give us a measure of this trend. So really the strategy makes sense, right? We're going to be looking at where the price is compared to a 50-period simple moving average. So that can give us an idea of a much larger, broader trend. We're going to use a shorter period RSI to help time our entries, and then a short period ADX to make sure there's a lot of momentum behind the price move. So usually the process when you're building a strategy is you'd bring up a chart, you'd bring up an RSI, ADX, and SMA, and then try to figure out the relationship between those indicators and the price move of the euro on your own. But obviously the problem with that is that you're having 3 different indicators, you have thousands of data points, and you have a notoriously noisy and difficult time series in the spot FX market. But with TRAIDE, we're going to be using machine learning algorithms to do the analysis for you. So what we're saying here is, all right, let's look at the ADX, RSI, and the price compared to the 50-period simple moving average. Let's find the relationship between those indicators, the price move of the Euro USD on a daily chart over this 3-year time span. So we'll get started and run the strategy. So on the dashboard, we can see the 3 indicators we selected, ADX, the RSI, price minus SMA. Then on the right here, we can see the indicator plotted over the last 200 points. So we can see the ADX range on the y-axis here, the data on the x-axis. And then for each indicator point, we can see whether the bar closed up or down. Now the histogram on the left is basically showing the culmination of the indicator plot. So we have the ADX range now on the x-axis, and the y-axis is summing up all the bars that closed up. So we can see when the ADX is between 22 and 28, 108 bars closed up, and only 93 bars closed down. What we can also see is the strength of the signal found by TRAIDE's algorithms. So a long signal strength of 100 means TRAIDE's algorithms were able to find a very strong relationship between this ADX values and a bullish price movement. So then, when we're looking to build our strategy, we'll select these as our first long rules. So what we're saying is, all right, every time the ADX is between 22 and 28, let's go long. And instantly we can see how well that strategy would have performed over the equity curve, as well as some basic stats here. So let's set a second condition on our ADX and continue to refine our rules. Now what's really interesting is if you notice when we select our ADX rules, we can see the patterns change in the RSI. So set these conditions, the RSI histogram changes. Now what this is showing us is when the ADX was between 15 and 28, what patterns emerged in the RSI. Now pretty clearly we can see some strong signals, but particularly in the RSI range between 51 and 59, we saw significantly more bars close up then close down, giving us some strong empirical evidence to go along with TRAIDE signals. So I'm going to continue to refine our strategy by adding conditions to the RSI and seeing how that affects the performance. Let's go up to some more in-depth stats. You can see our accuracy here is pretty good. Return per trade solid. Now I can play around with a little bit more, but as I can see here, the empirical evidence is outweighing the signal strength found by TRAIDE. So I'm really going to focus on where I see strong signal strength and more long bars than short bars for our long rules. A personal preference of mine is I always also like to group my rules. So while I may see a strong signal here, because it's on its own, meaning that on the range on either side aren't showing great empirical evidence, that's probably not something I'm going to want to include. So then let's add the conditions for the price minus the SMA, and we can see very clearly that after filtering out our first 2 indicators, that a very strong signal when the SMA was prices between 64 pips above and below, and we're going to continue to add the rules here. Now, before we go into our short rules, let's take a second and look at what this strategy is actually telling us. So the ADX gives us a measure of the trend over the last 7 days. So we can see here that over this date range, when the trend was not very small, but still on the smallish end, we tended to find a strong long signal. So just looking at the historical data here, we can see that it was a little choppy, but generally in a bullish trend. So we're not looking for a very strong trend where we tend to see stronger short signals. Second, on the RSI, a lot of people, usually the common convention is, all right, if it's over 50, we want to go long. What we're finding here is that really we're just looking for it to be over 43, and we still want to make sure that it's less than 60. It's like when we get above 60, that more of the counter trend comes in, and that could represent some overbought conditions. And finally, looking at the price compared to the simple moving average, we can see that as long as it doesn't deviate too far in either direction, we're okay going long. So as long as the price is between 190 pips below, 320 pips above, let's look to go long. So once again, that makes sense conceptually. It's skewed a little bit towards the long side, which is what we like to see. We can see pretty clearly here that we do have a lot of trend following tendencies, but we're not going to discredit ourselves just because it happened to cross below. We're still going to leave that for our long conditions. Okay, and then we'll repeat the same process going short. So we can see here that ADX was a little bit higher, meaning that we do see a stronger trend, that we're able to see a strong long signal, and the empirical evidence matches up. We'll continue to refine our rules. We can play around with it. We can see here that the empirical evidence, there was a strong long signal, but there were slightly more long bars than short bars. So if we go up to the stats, we can consider putting in this bar, but scoring it, looks like the final return actually goes down, and the accuracy goes down as well. So we have 69% accuracy and 1700 return without it. Then once we include it, the accuracy goes down to 64, and the return goes down as well. So we're going to remove that from our long rules and then focus on our second and third indicators. The RSI here, you can see that lower RSI values are what we're going to look for to go short, which once again makes sense conceptually. So as long as it's above 20 and below 51, we're going to look to go short. So here's an interesting bar. We have between 12 and 20 on the RSI, so pretty low values. And there looks like there is a strong signal and more empirical short trades. But when we do put that into our strategy, we can see the return drop from, or it was 1600, 70% accuracy, down to 1300 with 65% accuracy. So that's probably not something that we're going to want to include in our strategy. And that's something that you'll be able to see clearly both in the stats as well as the equity curve. Then finally, we'll look at the price compared to the SMA. And pretty clearly, we can see that when it's skewed farther below, we're going to want to go short. But even these longer conditions actually tend to improve our strategy. So I'm going to include the full subset, the price compared to the 50 SMA. So while this, in this test, effectively leads to not including any rules on the price compared to the 50 SMA, I do want to set the upper and lower boundaries, just in case in live trading, if the SMA does deviate more than 320 pips above or 580 pips below, that we're not going to enter in any trades, just because that's not something our strategy's seen in the past. So going back, the equity curve, we want to, like we said, make sure that it does well in a variety of different market conditions. So we can see here, it looks like it does pretty well in bullish and bearish conditions. We have some sideways here in the middle, mid-2013, where equity was still going up. Then we can see it does follow trend following tendencies, where once the big bullish movement here at the end, we can see the short rules take over. And if we're interested in viewing any of the specific trades, we can see those all listed out right here. Okay, so now we have our strategy. So the last step, like we talked about before, is that we're then going to be able to generate the code for the Expert Advisor for MetaTrader 4. For any of you who may not be familiar with Expert Advisors, an Expert Advisor is basically an automated trading program that will trade without any supervision. We're going to translate the rules we have here into entry and exit logic. And then we'll be able to set the position size, take profit and stop loss, and then let it trade on its own. So once we click that button, we'll be brought to the TRAIDE MT4 indicator library page. So like we said, we always want to make sure that the conditions that we're using for live trading are as similar as possible to the conditions that we use when we're building our strategy. One of the downsides of MetaTrader is even though it does have a large active community, the native indicators it provides are not very expansive, and MetaTrader isn't completely transparent on how those are calculated. So what we did is we built a DLL, basically able to import an indicator library directly from TALib. TALib is one of the more popular open source technical indicator libraries, and what this allows us to do is not only access the 80+ technical indicators from TALib directly into MetaTrader, but it also ensures that the indicators you're using to trade live are exactly the same as the indicators that you've used to build your strategy. So even if you're not using TRAIDE, you're still able to access this library and treat it like any other indicator that you might use. So we can download that, and we get pretty simple instructions on how to install it, both on Windows as well as Mac. And it's if you have any issues whatsoever, feel free to reach out to us directly. But okay, let's assume that we've installed the indicator library. Now if we go back to TRAIDE, we can see the code for our EA generated right in front of us. So most of this is a pretty standard template. If we scroll to the bottom, we can see the actual rules written out. If you have experience with EAs, this is open source, so you're able to dive in, add your own trailing stop or your own position sizing mechanisms. But really what you want to keep is both these indicator calls as well as the rules. So let's download that and then bring up our MetaTrader terminal. So this is the Gallant MetaTrader terminal that we'll be using. Open up our EA. Once again, for people not familiar with MetaTrader 4, this is pretty straightforward. You just want to open, make sure it's saved in the proper experts folder, compile, and we're good to go. Just like that, we have our EA that we just built, the Webinar Strategy 1, all ready to go in our MetaTrader 4 terminal. So right now I'm using the Gallant terminal just to make sure it's consistent with what we're going to be trading live on. And I'm just using a demo account because, like I said, we're going to want to paper trade this for at least a month to make sure that it performs well out of sample. But before we get to that, we still have the year of data that wasn't used to build the strategy that we're going to want to run. So we set the end date to 2015. So here we're testing the strategy over January 1st, 2015 until today. So data the strategy has not seen before. Make sure daily is set, and actually set our spread to 2. So since we're using a 5-digit broker, we always want to make sure that's 20. And then we'll run our back test. So like we mentioned before, really what we're looking for in this back test is results comparable to what we saw in TRAIDE. It's very likely that they're not going to be as good, just because on the very nature we're optimizing the strategy over that historical period. But we want to be sure that whatever results that we see in the back test are going to be results that we're confident and okay with trading live. So meaning, okay, is the accuracy, the return per trade, does the equity curve look okay for something that I would want running on my live account? And this is just the first check before paper trading it, just so we have two different levels there just to make sure we're not overfitting. But this will give you a really good initial sense of whether you just happen to memorize the historical data or if potentially you're actually onto something with a strategy that you're going to want to trade live. So I'll get to all the questions after, and we can talk about those. Just want to keep it full screen. So this back test will just take a second here, and then we can see how well we do. For those of you in MetaTrader, this should all be pretty familiar, and people that are new to MetaTrader, like I said, feel free to reach out to us after the webinar if you have any issues with running these EAs or anything along those lines. Before you run these strategy, you always want to make sure that you allow DLL imports, because like I said, we are using the indicator library. Actually, if you look over here, you can see all of the trade indicators. Not sure. Looked it out here on the left. So give another second here for this to finish, and then we'll see how well we've done. All right, there we go. We can see our trades over here. Let's look at the reports. So if you notice, even though our modeling quality isn't great here, since we are using day bars, that's really what this last green represents. We're okay with the lower modeling quality. MetaTrader 4 is basically just measuring the number of ticks it has. So over the last year, there are going to be naturally some ticks missing, especially in MetaTrader 4 demo account, but since we're using day bars, this isn't something that we're overly concerned with. But just looking at the returns, we can see, okay, 55, almost 56% accurate, solid 600 return. Equity curve, a little bit drawdown here in the middle, but over the last year, really on a nice uptrend. So that seems to pass our initial check. We can see here that our largest profitable trade, 265, and the smallest profitable trade, our average profitable trade is larger than our loss. So we're feeling good about those settings. You do notice in the expert properties, we can also set our take profit and stop loss and the bar close. So the bar close, what that means is that once the conditions are no longer met, or there's a signal in the opposite direction, then we'll exit the trade at the close of the bar. The take profit and stop loss will follow that same convention, except you'll add a take profit and stop loss on top of that. So like I said, from the link that I sent you in the chat, you can generate this code yourself and run the EA on your own account. We're going to be paper trading this. Let's actually add that to account so we get the daily bars, make sure automated trading is on there. Webinar strategy 1, like the inputs, let's set let's try using about a 2-to-1, so 200 take profit, 100 stop loss. And boom, looks like we're already in a trade. So there we go. We have our strategy built in trade, run over the back test, and then now we're going to be paper trading it for about a month before seeing if we want to include it into our trade quant fund. And like I mentioned, if you do want to get access to all of our live funds, you can, lost the screen sharing here. If you want to get access to our live fund, as well as all these strategies, you can open up an account to trade these live with Gallant. And whether you have any questions for us or for Bill, he's sure he can help you out with that as well. Let's see, we have a question. Can we use R to generate an EA? So I'm a big fan of R. If you see any of our blogs, that's what I'm most familiar with. And if we go back to trade, bring trade up one more time. Here. If we bring trade up, and if you wanted to recreate this strategy in R, there's something that you could definitely do. Like we can see here the price minus SMA clearly written out. So if you do feel more comfortable in R, that's definitely something you can do. You might have to probably triple check the indicator calculations, and if that's something that you want some help on or you'd like to collaborate on, I'm definitely happy to dive into that with you. So unless you have any questions, we've come up with a strategy. You can get access to the quant fund by opening an account with Gallant, and I'll be hanging around if you guys have any other questions.